right, welcome. We're here to talk yet again about the Pro Pivot Indicator version 22.5, built for Google Sheets. In our first video, we talked to you about everything as far as like how to, work with Sheet and stuff like that. And these first few elements here that kind of just get you started with your bias. Now, let's talk about the support and resistance levels here and standard deviations and everything else that you see on this side of the sheet and how they now can work with these elements here, how they correlate with these elements here, but also how you can use these as ways to understand what you're trading. All right, let's go. This is one of my favorite concepts in trading and in finance. It's known as standard deviations, right? Also known as normal distribution. So the market has a way of moving and flowing that when it's all said and done, you don't have to really play the guessing game as to whether the market is stretched or overheated. All you need to do is pay attention to the normal distribution of the market. So that's where standard deviations comes in, right? So we have deviation 1, deviation 2, deviation 3, and 4, right? Here's how this works. Typically, standard deviations are worked around the 20-day moving average. That's not something that I came up with. That's how they typically work. You can find similar things like with the Bollinger Bands and stuff like that, but those indicators are never going to be as on point and accurate as what you have here. You get a lot more false signals over there, right? The way that they work is they alert you when the market has moved a certain amount of deviations away from the 20 period moving average. So that way, you know when it's best to enter. Okay. So let's say, for example, let's say we open above the weekly pivot. So, okay, great. We're bullish. Right. Or let's rephrase that. Let's say you just pulled up the stock and it happens to be above the weekly pivot. Let's say that, right? Just, so that way we're not creating some, outlandish scenario. So you open the stock up, let's say you pull up, I don't know, Apple, right? All right. And they're above the weekly pivot. Great. That's great. Okay. Now, let's say that you're thinking about taking a long position. All right. The further along, so, right, resistance side, the further along we are in these points of resistance, okay, the more likely it is that you're about to take a bad entry. Okay, again, you're thinking about going long. The further along you are on these levels here, the more likely it is that you're about to take a bad entry. Now, what's going to happen here is these levels are going to become bold. All right, see how these ones are bold here? So as you go above these levels, they'll become bold. This is letting you know how far along the path you are. So Apple goes above 236, boom, this becomes bold. You're like, okay, I'm 2 standard deviations out. All right. 3, you're starting to push it, and 4, your entry is 4. Right? Let's make it a rhyme, right? You get in at 4, your entry is 4. Pretty simple. All right. You do not want to be taking a long position at 4 standard deviations out. Now, let me be clear. you're more often than not never even going to get to 4 standard deviations. 99% of all price will be within 3 standard deviations. 95% of all price will be within 2 standard deviations. Okay? And then you get to this point where you say about 67%, or let's just say 70% of all price will be within 1 standard deviation. Okay? So what you really want to be doing is catching a stock that is just getting above the high range. The high range and the low range form a 1 standard deviation box around the 20-period moving average. So a half a standard deviation on the high range, a half a standard deviation on the low range, and inside that box you are consolidating. So if you're just breaking outside of the high end, you're having a consolidation breakout to the upside. If you're just breaking out of the low range to hit, right, then you're having a consolidation breakout to the downside. Now, the longer you stay, and we're talking about you have to actually close within this range. So you have to close below this price and above this price, meaning nothing will be highlighted here. It'll just show you a blank, no bold, no colors. It'll just show you a blank support and resistance profile. Okay. Now, if you at least close in here once, that then makes each one of these breakouts that more effective. The longer you stay within this range, the more effective the breakout will be. Right? Now, I also want to point out that there's actually percentages attached to this stuff. So as you break out above the 1 standard deviation mark, there's about a 50-50 chance that you're going to be pushed back to the downside or that you'll continue to the upside. So that's a pretty good, it's a pretty good odds of continuation. And to show you how good those odds are, as you hit 2 standard deviations, you get above that, you now have an 84% chance or better that you're going to be going back to the downside. As you hit 3 standard deviations, it's now a 95% chance you're going back to the downside. As you hit 4 standard deviations, there's usually about a 99% chance you're going back to the downside. Okay? So that's how that usually would work on the resistance side. On the support side, 99% you're going back up, 95% chance you're going back up, 84% chance you're going back up, right? About a 50% chance of going back up, right? So, pretty much this is why you want to get a more um, reasonable breakout signal. But we'll talk about how these optimized trade signals play a role over here in time as we plot on our next video. Now, the monthly S3 and R3, these are very important levels on your pivot profile. These levels here give you the most probable range over the next month, period. Okay, over the next month, this range is almost guaranteed, meaning there is almost a 0% chance, a near 0% chance that you'll be going below this price or above this price in the next month. If you do, that means something big happened, right? So therefore, you can really rely on these levels. What I like to do with these levels here, let's go to my chart. Right, I'll keep Apple on so that way we can, show my Apple chart. Right, What I like to do with those levels is I like to, first things first, I like to get some Fibonacci's on my chart. All right. My favorite retracements right here. I'm just going to place my Fibonacci's. It doesn't matter where I place them here, right? Because we're about to do something that you're probably not used to. I'm just going to just lock that in and open up my settings here. And there you see my coordinates. Okay. What I like to do is I like to take these levels here. So we have the support at 177.40, and we have the resistance at 277.72. I like to take these levels, right? Let's roll them down real quickly, make it easy. And I like to plug them in to my Fibonacci retracement. I'm going to put my resistance up top, my support down bottom. Okay. And then we'll go from there. Right. So we have 277.72, and then we have 177.4. Right. Now, this makes for uh, great support and resistance levels going into the next month. So now my R3 is going to be my 100% mark here. My zero mark is going to be my S3. My monthly pivot is now going to be here at 227.56. This is now my monthly pivot. Okay, my R1, my R2, my R3. Then I have my S1, S2, S3. And of course, I have my extensions that go beyond these points, just in case. Right, I keep extensions there on both ends. All right, pretty simple stuff here. So that's what I like to do with these levels. This way, now I have levels on my chart all the time for an entire month. Right. Then I have my stop losses here. This is my stop loss system down here. Right. Whenever I'm in a long position, this is my tightest stop that I may have. Right. As you can see, 232.14. We had the exit long at 232.44. Okay. So if I was using my tight stop, I should have been out of this trade by at the end of the day. I have a wider stop here that that will keep me in the trade a little bit longer. This is for more like swing trading and those types of things there. So as you can see, if I was in a long position at the end of the day on Friday, this stop loss would have said stay in the trade until we break this particular level. Okay. Um, Now you don't change these levels unless they go along with the trade. Meaning, if the market started to move higher, you would move the stop loss higher. But if the market started to break down, you would never move this stop to the downside because I'm long, right? That would be just a lack of integrity and moving my stop to fit the current narrative, right? If I'm short, same thing. This is my tightest stop right here to get me out of the trade. And this is my wider stop more for swing trading, right? Now this chandelier is the ultimate stop loss strategy, right? This is for my biggest trade ideas. Let's say I'm in Apple and I am thinking, I want to be in Apple for as long as Apple is bullish, right? For one, this is best, utilized when I'm coming off of a reversal. So I'm looking for something like when Apple came off of the April lows, right? And then when I get into that trade, and I'm above my chandelier, then this becomes my stop loss in perpetuity, right? So Apple has to make a 3 standard deviation move to the downside just to knock me out of this trade. Okay. Now, this is more used as a bias for my trades, meaning I will still allow these levels to stop me out, but I'll use this level to determine whether I'm looking for shorts now or longs now. That's more of how I use it. So it's the ultimate pivot point indicator here, more than anything. All right. And then we'll talk about these levels here, which one of them is the trajectory, which is the level that's attached to this chandelier. Right. So we were looking for more like $7 to the downside here. Boom. And then I'm still above my chandelier. So I'm going to look for us to break back above this point and give me another long entry. That's how you kind of look at it. Anyways, that's it for this particular video. I'll see you guys in the next one where we talk about our optimized trade signals and we'll go from there. All right. Be blessed. Stay well.